Hello, we are ready to welcome Ralph Garcia with Turnium Technology Group.
Okay, good afternoon, everyone in the room, and for those of you joining online and on the webcast. I'll go through these slides. Hopefully, by the end of the presentation, I'll give you an overview of what Turnium Technology Group does. Why the SD-WAN market, multi-billion-dollar market growing at 30% plus CAGR is interesting investment opportunity. Why we like telecom outages. Rogers had a big one in July 2022 in Canada. AT&T, Verizon earlier this year here in the U.S., Optus in Australia back in November. Those are great opportunities for us to go after new customers. The industry dynamics, both in the M&A side and what's happening on channel dynamics with some of our competitors, provides another great opportunity for us to grow into that disruption. And then hopefully by the end of the presentation, lay out a plan on how we intend to get to sort of that $100 million in revenue, $20 million in EBITDA over the next 3 years, both growing organically and through M&A. The disclaimers that everybody's familiar with. So first on the investment thesis, you look at the SD-WAN market, probably a $50 billion market by 2032, as people move from the old firewall routers to building a software-defined wide area network. You look at it on our solution itself, from a state-of-the-art technology that allows you to bond together various wireless connectivity, whatever's in your area where you're setting up the network, having failover on Starlink or any other satellite service. Our partners love us because the product's so easy to use. They can white label it and grow their business using SD-WAN as the transport layer, and then they can layer software suites on top of that to build their businesses. We've got a proprietary technology that we've built over the last 13 years. Version 7's coming out over the next few months, and that'll allow us to scale to 10 times our size with some of the speed and capability we've built into that. Right now, we're trading at around 1 to 1.5 times revenue for a SaaS company versus some of our competitors at 4 or 5 times EV to sales. And a couple that I'll show later that have gone out and been acquired at that revenue multiple. So again, an attractive entry point for our company right now for new investors. Just some of the corporate highlights. I won't go through all of these. The main ones are on the right-hand side. We did raise $3.3 million in capital in April of 2022 as part of a pre-raise to our RTO. We went public through a CPC on the venture exchange. And then we did a $3.5 million raise last summer, 10 cents with a 14-cent warrant. That's funded the last sort of 2 years of restructuring the company and then bringing out the new product and getting ready for this new phase of growth. And lastly, I'll spend one last slide at the end on a non-binding LOI we announced back at the end of February to acquire Clarity out of Australia, and that'll provide a great growth opportunity for us, and I'll explain that a few slides. So, we keep businesses connected. If you're using our product and there is an outage either by a large telco or a utility company cuts a cable in your neighborhood, we provide that connectivity for you with the instant failover that we have in our product, and you probably wouldn't notice any of those issues. So, anyone was familiar with the Rogers outage in Canada, lasted for 3 days. If your POS system was on Rogers, you can only accept cash payments at that time. If you would have had our software, you'd have been able to fail over to one of the other networks, and your POS system would have worked, and there wouldn't have been any issues. We think from our product perspective, the platform's better, faster, cheaper, and it's been proven through our partners. We'll grow through our channel partners. Again, they'll implement our SD-WAN stack as a transport layer, and then they'll build a business on top of that. We'll be able to bond whatever services are in your area. They'll get wholesale rates from the carriers. They'll bundle that into a service and layer that on top of our SD-WAN product. Our typical price points for the SD-WAN piece, which is the SaaS revenue, is $20 per line per month. They can layer their services on top of that and, increase that to $80, $100 per line per month at their customer level and make that incremental margin. That $20 to us is at an 80, 90% gross margin. The beauty of our product, the way we've designed it, is it runs on low-cost hardware. And we've just tested it in the Intel lab. We did a webinar on April 9th with Intel, and we've shown speeds now up to 24 gigabits per second, where most of our competition is still at the 1 to 2 gigabit level. We can run that on an x86 chip. So for a $400 pizza box in your telecom closet, you can implement our SD-WAN product versus competition in thousands of dollars for that hardware. And that's really the biggest selling point for us, where our customers can build that now into their customer base, which could be a 20,000 store retail chain, where that price per store on the hardware side, a compelling argument for using our software. 3 different price points for the client. If they just want instant failover and connectivity, that could start in the $50 to $100 range, depending on volumes, all the way down to full SD-WAN. If you're installing the thousands of lines of volumes, you can get down to $20 per line per month from a price point perspective, and then the partners build their business on top of that. So again, we got great partnerships, especially on the hardware side with Intel and Lanner on building the CPE devices that'll go into the stores or the small office and enterprise offices. Our growth has really been through the partners. This is just a subset of them. You look at Comms 365 in Europe. They've grown their business on our platform from 15,000 a month to 30,000 a month over the last year. They roll it out on a white label basis. Evolve IP here in the U.S., Wi-Fi Cloud in the Middle East, SD-WAN company in the UK and in Africa, BCom in Germany. These guys love our products. They've looked at other SD-WAN hardware from Cisco and any of the bigger vendors. It's really tough to build a business on top of that hardware stack when you've priced yourself right out of that small, medium enterprise customer base. So they'll build their business on top of our product. And we've seen them grow, and most of these guys have doubled over the last 12 to 18 months in their business with us, and they keep rolling it out to larger opportunities. This is one just case study with one of the U.S.-based MSPs. Build the white label product, sell it across their multiple customer base. Fusion Broadband was our first channel partner out of Australia. They've grown out to. They'll sell it to their channel partners to expand within Australia, Southeast Asia, and Africa. And they've grown to 30,000 a month plus in MRR and continue to grow with us. Let's start just to explain. These first 3 quarters here were the go public quarters. We went public in June of 2022. So expenses with both the TSX-V, all the service providers, the accounts, etc. We didn't raise as much money as we wanted to. We came out, that was the worst time to raise money, just as the tanks were rolling into the Ukraine. It was a MicroCap market that sold off at the beginning of the year. We right-sized the company. We're a September year end, so that's our December quarter there. We'll report the March quarter at the end of May. And, this trend has continued. We've controlled costs and continue to grow our MRR. I think once version 7 is released, you'll see that growth accelerate on the MRR side, because now our customer base can roll out the product into much larger opportunities. We compete against the big guys, and if it's a hardware engagement where you've got multiple locations, you're looking at thousands of dollars per site from the guy, like hardware from Cisco, Palo Alto, etc. Or you can go with our solution on an Intel box at $400, $500, and the partner will build that cost on the hardware into their monthly rate and grow their business that way. The market's still selling or trading at 5.5 times EV to sales on a 2024 basis, 16, 17 times on an EV to EBITDA for the larger caps. Why we like the dynamics in the large cap market? They've bought most of our competitors, You look at Cisco bought Viptela, best thing that happened to us, because Viptela goes in Cisco and they're basically forced to rewrite their code base in Cisco OS. All of a sudden, the flexibility they had in their product to compete with us in a heterogeneous environment is lost, and that's an easier competitor for us in that kind of situation. VeloCloud was acquired by VMware. VMware's got all these issues now as part of Broadcom, as Broadcom restructures their channel. They got rid of 20,000 reseller partners. Broadcom did, and they're inviting, you're on an invite only now, back into their program. And they're looking to go from 20,000 partners to 2,000. So if you were a VeloCloud customer and you were a small, medium enterprise, you probably had no one calling on you and seeing if you wanted to upgrade or if you had any issues over the last year and a half, as VMware was part of Broadcom. And the latest one was HP buying Juniper. I mean, Juniper had bought 128, which was a pretty good competitor. HP had bought Silver Peak on the SD-WAN side. Now they got to decide between Aruba, Silver Peak, and 128, which SD-WAN product they're going to keep and go forward in the market. So the dynamics are in our favor, especially as version 7 comes out and gives us a competitive advantage from a speed side, price point side, and power. I mean, power is becoming very important as AI rolls out, and you see the power consumption on the AI side in the data centers and on some of the edge points with AI. And if we could provide that speed for some of these opportunities, either lower power, lower price point, becomes a compelling argument for our channel partners to go in and grow our business. Just going back to that small cap valuation discussion, Media Valet and True Context both were acquired recently in Canada, 4.7 and 4.4 times trailing revenue, or 3.6 times 2024 revenue. We're trading right now at about 1.8 times. Just as we're going to be hitting our stride with version 7 coming out, we've right-sized the company from a cost perspective. That trend will continue that I showed you on the results side, and when we report at the end of May. So a great opportunity, I think, to invest in our stock. Why? Because version 7, right? Our issue before with version 6 was if you scaled above 2,000 or plus lines at particular engagement, you saw speed degradation, and you had to roll out more aggregators, et cetera, to scale. Now with version 7, the way the guys have done an incredible job, the development team, get 10x performance. We've proved this in the Intel lab on that similar hardware price point. So you can run it on a Xeon chip and scale up to 100,000 sites. So for a large partner, where maybe he had in the thousands of sites, he can grow his business now up to 100,000 sites over time with version 7, and we can replicate this at each of our partners. So all we really need from a scale perspective on revenue, I'm not going out hiring 10 sales guys to go out and find this market. We find the right partners like Comms 365, Evolve IP, Fusion, et cetera, and they'll go out now with version 7 and scale their businesses. So, I can see Comms 365 going from 15,000 to 30,000 a month to 100,000 a month now with version 7 as he grows his business. And that's similar to all the larger partners. So going from, we're at a 5.5 million run rate right now to 10 million would be easy with just our existing partners. With version 7 now, I can find 5 to 10 more partners and scale that 10 million to 20 million in revenue easily organically. The acquisition, we announced the non-binding agreement at the end of February. We're at the definitive stage, so hopefully in the near term you'll see something on a definitive agreement, and then it'll be 3 to 6 weeks from a regulatory perspective. Close it. Clarity is a private company, offers infrastructure as a service. They're out of Australia. They offer a great suite of products and a virtual desktop, including a cyber suite, from pen testing to malware. We can offer that on a monthly basis, so cross-sell into our customer base. Very little overlap between customers. They've got over 100 customers in Australia that are all running on MPLS lines. So right there, we can go in there and get them off MPLS onto our SD-WAN product. And then in our customer base, we can go in and sell this virtual suite, including a cyber managed services product, and take our customers from $20 per line per month to $250 with this suite. Anybody who comes on for the full suite, including the cyber piece, that's another $225 per line per month at that customer opportunity. So great cross-sell opportunities. It's going to be an all-share deal. I'm going to offer 40 million shares at 15 cents, so 6 million Canadian to acquire Clarity. This will come out on the earnouts, the extra 4 million. That'll be self-funding if we hit the 2-year EBITDA earnouts. We'll maintain 70% of the combined business. And again, on the back of integrating Clarity, we've got 5 other acquisitions lined up that'll either add another piece of technology that we can layer onto the stack and cross-sell into our customer base, or bias channel. Now, if we can do an acquisition in Europe and another one in the U.S., I think that'll increase our channel opportunities in both those regions. Just on the cap table, there's 105 million shares outstanding now. There'll be 40 million issued for Clarity, so that I guess to around the 150 million range. On the options and warrants, you look at the weighted average price, 20 cents on the options, 15 cents on the warrants. You know, this can bring in 10 million combined in capital. We'll see where we trade after the quarter and when we close Clarity. You know, from their customer base, we can probably double in size with the Clarity business, and then cross-sell on there. We'll add some pretty interesting revenue synergy growth. Between management and strategic investors right now on the Turnium side, over 51% ownership. So everyone's aligned. The largest shareholder from Clarity will end up with around 18% of the combined company and will become our global CEO after closing. So again, everybody's aligned on making, on working towards this synergy and getting the growth opportunities there to capitalize on this acquisition. On the Turnium board, a mixture of enterprise software, telecom experience, and just some public market board experience. John Arnett's the founder of Turnium. He'll remain on the board as a director, and he's been helping me out immensely on the M&A opportunities as we look for targets. And with that, open it up to questions. Any questions? Yeah, if there's no questions, you can reach out to me or to Bill afterwards. We've got some slots open for tomorrow also, if anybody's interested in hearing more on the story. Thank you.